Today we're going to talk about paying workers under the table, how a routine EDD audit becomes a criminal tax case. The same can be said of a federal audit. Many employers think that paying workers in cash under the table is simply an employment tax savings payroll shortcut, especially if they're utilizing illegal aliens to begin with. No payroll software, no employment tax withholding, no paperwork. But California and the IRS see this entirely differently. When workers are paid off the books in California or anywhere in the nation, in California, the Employment Development Department, the EDD, is going to get upset. They're going to view that arrangement as participation in the underground economy, which is a big deal in California. And what begins as a payroll audit can quickly become a high-risk civil or criminal tax matter. Federally, it can go criminal just as quick. Hi, I'm David W. Klasing. I'm a dual licensed tax attorney and CPA, and I'm the owner of the tax law offices of David W. Klasing. We have 23 offices in 11 states to serve you nationally. Today I'm going to explain how the EDD identifies under the table payroll, why cash payments create significant civil and criminal tax risk, and how a payroll audit can expand into state and federal criminal tax exposure simultaneously. So what does under the table payroll really mean? Under the table payroll is not limited to just cash payments. The EDD and the IRS often investigate payments made through cash withdrawals, personal bank accounts, Zelle, Venmo, Cash apps. They also look into improperly issued Forms 1099 when they should have received a W-2. The core issue is whether compensation was paid to workers without proper payroll tax reporting and California and federal income tax withholding compliance. So how does the EDD, or the IRS for that matter, find this problem? Well, many employers assume that cash payroll is invisible to the government. It's not. IRS or EDD audits may begin because of things like worker complaints, unemployment claims, disability claims, worker classification disputes, or inconsistent tax filing. Auditors are going to compare bank records focusing on frequent and substantial cash withdrawals, payroll reports, DE9 and DE9C filings, W-2 records, 1099 records, and business tax returns. So why does cash payroll create multiple tax problems here? Well, the risks here extend far beyond just simple wages. Unreported payroll can create unemployment insurance liability, employment training tax issues, state disability insurance exposure, personal income tax withholding assessments, and worker classification disputes. One payroll problem can generate multiple assessments across several tax systems. Criminal tax charges can also be levied for aiding and abetting income tax evasion and evasion of payment. Don't issue 1099s or W-2s, evasion of payment. Issue net checks and don't remit the payroll taxes, evasion of payment, both criminal. When does the audit become more serious here? A simple payroll mistake does not automatically mean employment tax fraud. That's how we can help. But the EDD and the IRS become increasingly concerned when they find things like separate payroll ledger, repeated cash withdrawals, employees treated as independent contractors when they shouldn't have been, especially if they functioned as employees, missing wage reports, or explanations in an audit that don't match the records. At that point, the issue may shift from simple civil compliance to criminal tax intent. California law includes significant penalties for fraud or anything involving the intent to evade payroll taxes. The EDD may assess fraud penalties in addition to taxes, interest, and other assessments. And in serious cases, California law allows for criminal prosecution here. They can get you for false payroll reporting or any intentional employment tax evasion. Federal criminal exposure can follow on its heels for similar reasons. Many businesses in this situation focus solely on California. That is a mistake. The same facts that can create EDD exposure will also create federal payroll tax issues. If workers were omitted from federal payroll reporting, for example, the IRS is going to come in at some point and examine income tax withholding, Social Security tax issues, Medicare tax issues, and they're going to be looking for employment tax compliance. In several cases, federal felony statutes may become relevant. If your business paid workers off the books with cash, or improperly issued 1099s to people who should have got W-2s, You should act carefully here. The earlier you get us involved, the better results we typically achieve. Before responding to the EDD or IRS, at the tax law offices of David W. Klasing, our dual licensed tax attorneys and CPAs routinely help businesses reconstruct payroll records, analyze worker classification issues, and respond strategically to EDD and IRS inquiries, all the while minimizing civil and criminal tax exposure. Call 1-800-681-1295 or visit klasing-associates.com to schedule a confidential, reduced-rate initial consultation today. Do it today, you won't regret it. Dave Klasing, Tax Attorney CPA.